This is a big one that I struggle with clients, making sure they get all their expenses in. So MYOB will cover the checks or anything that's going through the bank account or through the credit cards that you reconcile. You'll often find a business owner has a third credit card or a second credit card, or they've got receipts stuffed in their drawer that they just haven't captured all that information. Now, $1,000 worth of expenses saves them $300 on tax at least. So a high income earner $465 on tax. So make sure you capture everything you possibly can. Then you have to put the onus of that back on the client as well, and make sure that ask for those things. Just make sure there's no hidden expenses. We can't identify that because we're not that closely involved with the client, whereas you have that opportunity. Make sure the creditors at 30 June are right. Make sure you've got all those invoices that were issued pre-30 June. Make sure you've got them in the creditors list. They form deduction for that year. The reason why I mentioned workers' comp, if there's a statutory payment which is due, so that's statutory, it's required by government, it's required by legislation, even though the invoice isn't issued, if it's in relation to that 30 June 10 or 30 June 11 year, even though the workers' comp invoice isn't even issued until July, you can still bring that into account in that financial year because it's a statutory payment. So, a client in a high-risk, workers' comp for some clients isn't very high, but a client in a high-risk industry, concrete or a builder, and a large workers' comp premium, you can potentially get that deduction brought forward. And then the account, so all you're doing is bring these things to the accountant's attention. Sometimes it depends. It may be a low-income year in one year and a high-income year in the next year. You may not want to bring that over because you already might be in a loss that year. You might be more profitable that year. So there's some toing and froing which we can manipulate to get the right result. FBT, I only mention that because the second most exciting night of the year is next year, which is the 31st of next tomorrow is the 31st of March, which is the end of the FBT year. No one gets excited by the end of the FBT. No. But most importantly, corporate account communication. I was horrified the other day. I was talking to someone in this room and they said clients don't like to call their accountant and they hate calling their accountant. And that just astounded me, bewildered me. I don't understand that. And she explained, because they charge. You're on the phone, the meter goes on, and you get charged. But I find it hard to believe that the client doesn't have that. It astounds me that the client doesn't have that relationship with their accountant. They can't trust it. But apparently it exists. And you might say, well, okay, you do all that stuff and you've done all the job of the accountant. What does the accountant then do? We do things.
What do you do?
Yeah, it's probably some higher level tax planning stuff. And there's some stuff I may not mention because I'm on being filmed on camera. But there's things, accounts might look at whether we account for tax purposes on a cash basis or a accrual basis. The smaller general business tax rate, which is the investment accounts, which is still being reviewed this financial year, 11 financial year. We might review the corporate structure. So, a client may be stuck in a company structure, incurring costs at a corporate level, where they might be better off having put up a structure with a big trust structure, partnership, or sole trader. And they've all got different tax ramifications, but it's stuff that we would look at as opposed to I walked into a client the other day, they're a retail shop, and one of their kids, their 16-year-old boy, was working in the shop, doesn't know. Do you pay him? No, I don't pay him, just he does work because we keep him at home. He's 16, he can work, he can get paid. It's a tax deduction. So working, kids that are actually working, never pay wages to kids that are not working in business, but kids that are working in business, yes, it's quite different. They become employed, it pays you employment registration, pay the super. So their pocket money, in effect, becomes a tax deduction. So little things like that we can do. There's two things, not that it's, again, not major. The government are pushing with the mining tax, they're pushing for a 1% reduction in the company tax rate from 30 down to 29. It's only 1%, so it's not huge. If you've got a company which makes decent money, pays decent tax, then a 1% difference in tax rate might save $10,000. So you might be able to defer some income from 1 year to 2 years if that change is going to come through. There's also your 1% flood levy, which is in for 1 year. Yes, 1 July that the flood levy is in. 0.5% for under 50 years, then 1% for above 50. That's for again, I've got clients that need those that earn some decent dollars. So for clients earn $300,000 and it's a 1% flood levy, that's $3,000. That doesn't sound much. Well, it does. It doesn't sound much if you're earning that type of money. $3,000 is $3,000. So if you can reduce that client's personal tax for that 1 year legitimately, there's a potential saving tax. If it's $500, it's a tax saving. So his pocket as a personal tax is often accountants, when they're doing, I mainly deal with small and medium enterprises, and often you can forget that the business owners are taxpayers as well. They're individuals. They pay tax as well in their own right. So often people forget, and again, this isn't for you, it's more for the accountant, their personal tax situation. What can they do to reduce their business? What can they do to reduce their personal tax? And there's all sorts of rebates and offsets and education tax refunds and things like that which your clients should do. So we review all of that type of stuff. And also there's some specific tax strategies which may be an integral part of the client's overall financial strategy. Superannuation, for instance. Directors can pay themselves additional superannuation as a part of their salary package. Tax deductible, creates wealth, saves for retirement, great way to do it. But there's certain limits that are in place of how much you can put away in super each year. Does anyone know that? It's how much you can super each year.
Okay. 25 days up to 50 or 50.
So anyway, anyone under 50 this year can put away 25 grand in super maximum. And that's from all sources. So that's from all your employers, all sources. Employer, and if you've got life insurance with another superannuation, that's covered as well. So we consider those type of things. If they go over that 25,000, it's taxed at the top marginal rate 46.5%. That, just out of interest, that 25,000 used to be 50,000. Global financial crisis, government in deficit, they dropped it overnight from 50 to 25. That 25 stays in the tax system. 12.5 grand tax if you're on top of it, so it's 12.5 grand reform. And that's why they're keeping it down to 25. It's because they're trying to generate revenue. So they're the type of things that we look at. So yes, we do see the outcome. First part was just stuff that you guys can identify. Second part is stuff that we can massage and manipulate. But most importantly, time critical. 30 June. Once 30 June passes, you can never get an opportunity back. Any questions? Okay, so that's all pre in the financial year. And then there's post end financial year, so after 30 June. And yeah, there's nothing you can do to reduce the tax after 30 June. But there's still planning around that tax that can be done. By that stage, you will have known what the tax liability is. There's planning for that tax liability. And again, if you're like me, my life is date-driven. GST is due by the 28th, pay-as-you-go entitlement by the 21st, pay-as-you-go installments by the 21st, fringe benefits tax by the 21st of May, income tax by the 15th of May, ATO payment arrangements, payroll tax by the 6th, super guarantee by the 28th. And we recognise those dates, and I know those dates. But do clients know those dates? That's right. What do clients hate? Clients hate surprises. Hate surprises. They hate getting that's on the 27th, but $17,000 which is due on the 23rd. And that's when. So, clients hate surprises. What I do for clients, which is quite simple, It's just a tax payment calendar. You give it to the client. So I've got a retail client, he's got a diary on his desk, he just sticks this in the front of his diary. So he's never got any excuse to say to me, I didn't know that was coming up, I forgot about that, because it's always there. And he just refers to it every now and then. So put everything on. When's their VAT due? When's their INS due? If they've got a payment arrangement with the tax office, when's that due? When's their super due? And so on and so on. And it's quite simple. And we know those dates, but the client doesn't know those. And again, it's semantics. If you know what the actual is, put the actual. But otherwise, just put estimate. Know that pay-as-you-go withholding was, it's 5,550 monthly in February, so let's estimate 5 grand. So the client then knows that in April, he's got a $5,000 liability. You don't need it to be exact. At the end of April, you'll be able to put that actual figure in there. Email it to them. It's quite simple, easy to use. Some of you might already be doing it, but it's a tool that I use for my clients that want it or need it. And some clients got a handle on these things. Some clients are just comfortable with it. They pretend to know what they're doing. Others are all over the shop. And this helps them. It's one thing I know that clients make surprises. But I'm happy to give a copy out to Sue just to throw it in. Tax agents get extension for yes, we get extra 4 weeks of that. So the client is.
Can I ask a question? If we're BAS agents, well, why don't we get 4 weeks? Can you?
The most logical time to get an extra 2 weeks.
It's a bit elitist.
Why can't you pose that question as you know bookkeepers? Why can't you pose that question? Why the tax agents? I mean, you guys are just as busy as us.
Well, we're still trying to get the running done. It's on our portal.
But otherwise, yeah, we get 4 weeks. So if you're running behind, and your client needs an extension on their VATs, or suit that voucher for this, call the accountant. You can get an extension. But back to the conversation I had, clients are afraid to, or bookkeepers are afraid to, because they will get charged.
But if you to get your 4 week extension, we've got to tell you and lodge it before the 28th. Of that month.
No.
Or can I ring you on the feed?
It just needs to be lodged. It needs to be lodged through the tax agent portal.
Right.
They've got to be in the tax agent.
They've got to be on the tax agent.
But if you've done the BAS, and this is where I get frustrated, if you've done the BAS and it's all filled out back and front, and you email it or scan it or fax it through to the account, how much work is that? Why can't the accountant just as a part of their service just lodge it?
Why do you charge $300 for that service? Why do you charge $250 for that service?
Because I'm not getting the NYB file. I'm just simply providing information.
But Jane's saying something.
You're not doing any work for it.
I don't understand.
He's agreeing with us.
I don't understand it. You're creating a goodwill with the charge. You're creating a goodwill with the client with the bookkeeper, which I don't understand.
Yeah. No, we don't.
But yeah, it's client, if you have to pay, if you haven't got it done, it's either that or cop a 110 or 220 fine from the tax office for lodging late. So what's the lesser of two evils?